Welcome back. My name is Chris Gosselin from Australian Fund Monitors. This morning, just 24 hours after Donald Trump's extraordinary revelations or announcements from the Rose Garden, we're talking to Winston Sammut from Euree Asset Management. Winston, good morning.
Good morning, Chris. How are you?
So it's been a pretty tumultuous week, really, it seems a long time ago, but we had the Reserve Bank sitting on its hands doing nothing. We might come to that in a little while, but the real news of the week globally has been Donald Trump and his tariffs. What's your summation of this, even though you're primarily looking at REITs in your with your property hat on? But what does it do to the world?
In terms of the REITs, as I've sort of maintained over many years, the level of interest rates is an important factor or input into valuations for REITs. And what's happened with this issue with the tariffs is that investors have moved to safety, and we've seen the US bonds rally to the extent that they actually traded below 4%. The 10 years there traded below 4% last night, and they finished just a touch above 4%, which was a fall of about 16, 17 basis points. And likewise, we will probably follow today here in the Aussie bonds. So from a REIT perspective, I guess there is a positive in that rates are moving lower, have moved lower, and whilst the RBA didn't look to cut the cash rate last Tuesday, there's probably a 95% chance that they will cut rates at the next meeting and beyond. So that's one of the benefits that's come out of this. But the reality is that the investors are just struggling with what the medium to longer term impacts of these tariffs being introduced. Are we going to see China, Europe, Taiwan, Japan retaliate and start a trade war? So that's what the concerns really are. What's really happened is that the perception is that inflation is going to rise in the US, and inflation will rise pretty well across most other countries as well. But more importantly, that trade will suffer. And as a result of that trade suffering, that global growth is going to be hindered, in which case, they are looking at the prospects of a recession in the US and elsewhere, which is not positive for markets.
So interest rates are falling. I mean, you would normally say, hey, terrific, interest rates are falling, but quite often there are negative reasons for interest rate falling, which, as you mentioned, was lower growth, and therefore you have lower interest rates to try and stimulate growth. So lower interest rates, whilst superficially are positive, some of the reasons behind them can be quite negative.
Sure. And that's a good point. But the reason why rates have fallen is because investors are buying safety. They're actually buying bond assets and pushing the prices up and yields down because it is a flight to safety. And so the money that they're taking out of the equities market, which we saw last night, the US markets are down at 3.5% to 4%. The Dow, the S&P 500, the NASDAQ, close to 4%, all of them. The money that they're getting from the sale of these equities, they're putting into bonds. So that's the issue, that bonds are falling because there is demand and there is buying, pushing the prices down. It's not because of expectations of the slowdown. It's the fact that people are moving to safety and they're buying government as a result.
So if people are moving to safety, does that augur well for your property sector?
What we are seeing in the property sector and what we have seen in the last month or two is actual transactions taking place, and transactions at the higher end of the market, and yields of either and cap rates have been can now be justified, or we can reflect on the fact that, I mean, the Salesforce building here in Sydney, which has been on the market for quite some time, there's a transaction taking place at a yield of around 6%, 5.5% to 6%, which is quite positive because it's a large asset. What we've seen up until now has been small assets being sold, and you can't rely on valuations of those particular smaller assets around town. The sector is cheap. Having said that, REITs in the US last night were also down. The sector was down around 8%, 8 to 10%. So we're likely to see some more downside today. Our sector was down nearly 2% yesterday, and judging from the futures, the SPI futures will probably be down 1% today. That's the indication. So we took part of the brunt yesterday, and take the balance of it today, and then I think people will sort of try and work out on the weekend what this actually means in the longer term, whether there is going to be retaliations from the major trading partners in the US.
I think that was a strong theme from the Reserve Bank earlier in the week. You know, there's this sort of uncertainty. I think there is global uncertainty, whether it's from investors or whether it's from central banks, whether it's from politicians. Politicians, we're in the middle of an election cycle, so politicians are trying to say all the right things. No one really knows what's going to happen going forward. And in that environment, you can't really blame investors saying, I'm going to sit on the sidelines, as Warren Buffett looks to have done late last year, and I'll wait this out and protect my capital. The other thing, of course, that's presumably affecting markets is index funds. There's been a huge and there's a long bull market. We've seen a significant increase in index funds, and of course, when the market turns, that then negatively affects the rest of the market as well, because funds come out of, and there's selling across the board, irrespective of whether the companies in that index are good or bad or not.
Correct. As an example, the Goodman Group has been, up until a couple of months ago, about 40% of the REIT index. But a couple of transactions that have taken place in the last couple of months, the Chinese Investment Corporation sold down a block at above $33, and then that was followed up by a capital raise that the Goodmans undertook at $33.50. I must say the timing of that was superb as far as Goodman is concerned, because now the stock's trading below $30. Now, from the 40% exposure of the stock in the index, it's now getting close to the 30%. So there's a very big drop. It's also a stock that most of the general equity guys have been investing in as their only exposure to property. It's now data centers were the big go again up until a couple of months ago, but there was news that Microsoft is now looking to cut back on the number of data centers that they were looking to, or hopefully looking to develop in Europe and in the US, and they've pulled out of those plans. So is the demand for data centers really there? Goodman has announced that they were going to put in several $1 billion into the data center asset class. So, you know, these things are impacting on Goodman's as part of REIT index and as part of the larger index. But as you say, because of the growth of index funds, it's great when markets are going up because they keep buying the index and stocks go up. The reverse is likely to happen now if people pull their money out of the index funds and they have to sell those stocks in the index, pushing prices down.
Winston, it looks as if uncertainty is still going to remain the major theme until all this either settles down or the reality of what's really going to happen and the reactions to Donald Trump is going to happen. And that's going to take time. It sounds to me, and there have been reports in the media, that maybe investors haven't actually taken on board the level of risk there is to the global economy. The market's down, but how much further can it go? We all know, especially people of your generation and, God forbid, my generation, know that markets can go down very quickly, very rapidly when investors take flight.
Yeah, we have been in an environment where eventually everything goes up. So, don't worry about the short-term falls in the market, because eventually they'll go up. We're now in a different environment altogether. And that's interesting, your comment about uncertainty. In fact, the governor of the Reserve Bank, when she was explaining the reasons why they didn't rates, she mentioned the fact that they're navigating global uncertainty, number one. And, of course, the other thing we need to tell that really needs to be added to that decision-making process is that, we're coming up for a domestic election here, and that creates more uncertainty, particularly as there are some concerns about a hung parliament and what implications that has in terms of either one of those of the major parties forming an arrangement with either the Teals or the Greens. So there is a lot of uncertainty around at the moment, and that's not helping boost people's confidence.
Winston, always good to speak to you. On that note of uncertainty, I would suspect that it's going to be a word we're going to hear more of over the coming weeks and months as the dust settles or the smoke clears, as it were. It's certainly taken Ukraine off the front pages, and I do notice, being a natural cynic, that Russia wasn't included in Donald Trump's list of countries where Norfolk Island was.
Yes, I think they left out Tasmania.
They did leave out Tasmania. I think the Tasmanians would be very upset.
Yeah, just a comment about Buffett, who's sitting on the sidelines. He actually sold out late last year. So yes. he preempted all of this, whereas people are now looking to sell down now rather than, and think about consequences now rather than taking the Buffett way and doing it beforehand. It's obviously worked it all out.
Well, I think Buffett, goodness me, Winston, he's older than both of us put together, yeah. I think. But, and I don't want to discount your ability in the market, but he's probably smarter than both of us as well.
Yeah, I think so.
There's a very good line saying, what Buffett does probably worth following.
Yeah, I would.
And that's not investment advice.
Okay, no, it's not.
Winston, great to talk to you. We'll look forward to speaking.
It's a pleasure.
Soon.
Thank you.
Okay.
All the best.
Weekend. Bye.